Welcome to Drilling into Crypto. I'm your host, Mohammed El Masri. Every week I speak to the leaders that are driving the global financial revolution. Drilling into Crypto puts the spotlight on the importance of crypto assets, on energy markets, and on global monetary policy. Today's guest stepped into the world of Bitcoin before most had even heard the word. Known as Satoshi Chad, he recognized the power of this technology back in 2012 and has been pushing the industry forward ever since. From launching early blockchain ventures to advising funds, family offices, and enterprises on Bitcoin strategy, he's become a go-to architect for treasury integration, mining operations, and scalable growth. A strategist, a builder, and a relentless force in the evolution of energy and finance. Please welcome Satoshi Chad. Thank you for joining us, Satoshi Chad. How are you doing?
Thanks for having me on. I'm doing great. Just coming off Thanksgiving yesterday with my family and enjoying putting up a bunch of Christmas lights. How are you doing?
Doing well, thank you. Dealing with this Bitcoin market.
Another epoch.
Yeah, I strongly believe that Bitcoin's going through, a price correction. I think in the past few weeks. But I'd like to learn more about Satoshi Chad and how you ventured into Bitcoin.
Yeah, thanks for having me on again. So I come from a very heavy, I guess, political background. I've ran for office in the past here in the United States, and just through my involvement, I had a lot of libertarian circles. And in 2012, there was a candidate in the United States running for president called Ron Paul. And Ron Paul, if you're unfamiliar with him, he's very into anti-Federal Reserve. That's the institution in the United States that everybody's familiar with that runs the fiat currency in the United States. So we all hated the Federal Reserve. They took off the gold standard, all these different nuances. So there was nothing obviously finite around cash. And that a lot of the core guys, the core delegates, the people that supported Ron Paul to becoming president, they started talking about Bitcoin. At the time, I didn't understand what it was. Just kind of the name that, hey, there's way on the computer we can take down the Federal Reserve. It's called Bitcoin. I was like, all right. And then I saw there was a famous Vice article around that same time that wrote about it, but they kind of focused heavily on the Silk Road components and the dark web components. And so that seeing that I didn't know what the dark web was and Tor network and the Onion network. And I believe if I can recall in the article they talked about that. I'm like, what is this Onion thing? And being anonymous online, and I was young at the time, so it didn't really make sense to me. And unfortunately, I didn't take advantage of it at that time. And then about a year or so passed, and I was heavy on Reddit, and people kept talking about it on there. And I'm like, what is this thing? There's something must be here. And my friends are still talking about it. Some guys are holding it. And so I built up the courage to wire some of my money overseas to, at the time I didn't use Mt. Gox, but I ended up using an exchange called BTCE, like an Eagle. It had a pretty good user interface. I sent some money over there, bought some Bitcoin through there. That kind of started my journey there, and it was exciting, right? Some of the risk around that, wiring your money to this unknown entity, and ended up buying ASICs. Started developing around that time, but they were not what we have today. They were like the size of a USB stick that you could just stick into your computer. So kind of toyed with that a little bit, and you could go on Reddit and talk to the core developers because it was maybe 300,000 to maybe a million people, depending on that time frame. And you could just go talk to these individuals. So it was really hands on, and I guess in a sense, which was exciting. Some time progressed. The industry as a whole really grew. It was even back then, it was heavy on Twitter. So you could see all the different participants there. And I started feeling left out in the excitement in the sense of building something to contribute to the overall ethos. So they started seeing a lot of the quote unquote shit coins emerging at that time. They had a lot of Dash came out, a lot of there was Prime Coin, which got the world record for a lot of prime numbers being found. I don't know if it's around anymore, but that was something that was kind of funny at the time. There was some staking coins that emerged. And I found interesting was in my mind, and some people talked about this in more of an esoteric manner at that time, but there's going to be financial instruments getting brought on chain. And there was Dash Coin in particular, had what are called master nodes. It's a little bit more kind of complicated form of staking, if you will. So you had to do some server setup and different nuances. And for a lot of people at that time, it was too complicated. Nobody wanted to do it. So there was it raised a problem. So I thought, let's make a turnkey solution that we can enable individuals to deposit a coin, press a button, spin up the masternode for them, or if there was a staking coin like a peer coin or something, that was a big one back in the day, they could do it. So it was hard to pitch that to a lot of people because Bitcoin was already kind of viewed still as a criminal thing and as oh it's too small. So it was really hard to pitch to investors. But within the community, I got some traction. Roger Ver, he owns Bitcoin.com. We were able to get a MOU with him, and he was doing an exchange at the time. So he's like, hey, let's maybe put your technology on the back end of the exchange for us there. We had a similar experience with Uphold Exchange, which is around still. They were interested in our technology. So that was really exciting.
Around what time was that?
So this was started rolling into 2015, 16, 17 kind of years. That was when all the ICOs were really kicking off and everybody wanted to be an advisor and all these different things. It was kind of, unless you were like, I guess from a VC background and you could have some sense of discernment, a lot of people were getting tricked. But one of my, I don't know if this guy was necessarily an advisor, but the gentleman that we brought onto our team through the woodwork, we were able to get a Tammy Marciano. She's married into the Guest Jeans family. She became an advisor to my venture, and that's how I got kind of introduced to family offices because she does a summit every year, every other year called Family Chateau. And so we did her event that year. I think that was 2017. It was really interested to see kind of the emergence interest of family offices and hedge funds because they had about 300 different offices there. Like, for example, the family office from DocuSign was there, the guy that created Pokemon, a lot of real estate guys. Yeah, I can't remember all of it. There's like 300 people, but they had a hard time getting the headline speaker because you really at that time still had to have some type of, I guess, cyberpunk relationship to the early participants, and they wanted a good speaker to kind of, I guess, impress all the family offices there. And I ended up bringing Anthony Papliano. He came in and he was really nice at the time. He was with I think it was Morgan Creek Capital at the time. Yeah, he came and he did the keynote there. It was really interesting. He basically pitched Bitcoin as a ledger, right? What it is, and he broke down the original ledger was on a piece of paper, and then it transitioned right to QuickBooks, if you will, and then this is kind of the future, and that's essentially how he pitched it. Lovely guy, brought his wife, and so we all got to meet and hang out. Nice people. Um, I funded this with my own money. Essentially, I wasn't good at capital raising at the time, and I ended up running out of all my Bitcoin.
Oh no.
So I humbly had to shut it down before he
Classic.
I shut it down before I imploded my whole life and then just kind of took the loss and all the learning lessons that came with that and the great relationships I made. And I ended up going to a trip in Bali a little bit after that with the gentleman that started the Bitcoin Foundation in Australia. His name's Trent Barnes, really cool guy. So we did like a crypto retreat there, and that was really interesting. Met a lot of great people. Then just kind of disappeared for a while, went into the just the normal private sector, did a lot of marketing as a director and a marketing agency, and now kind of got interested again.
So what got you interested again in Bitcoin exactly?
Taproot, which was I think 2019 or 20, was a change to the consensus of Bitcoin. It's led to what a lot of people now know ordinals and inscriptions. And I just thought that this change to Bitcoin is really expanding the value proposition of what it already is to a lot of ideas that people talked about on Reddit years ago. We used to talk, oh, you could put the government on chain, you could put businesses on chain, and everybody at the end of the day still wanted it to be on Bitcoin. I know there's a lot of these guys, it's got to be cash only, but we still, even back then, we were talking about these things. And so to see it happen today attracted me back to the builder inside of me.
It is definitely exciting and very motivating to see that a lot of people are building in this space. Uh, and it gets you back to the notion that there is a global community that is aligned on a single global reserve currency at least that's what we want to see it as, um, that allows for global adoption of a peer-to-peer transaction system that is decentralized with no intermediaries and giving power back to the people, and with the ability to now transfer energy to the people and use Bitcoin for the financial revolution, because you can literally power your money, right, with Bitcoin mining. And now I see you and your team building something amazing with one Bitcoin. Can you tell us more about that?
So now I started a new venture. We're going to be focusing on Bitcoin mining. We see the core tenets are still very important. And that's where a lot of traction's already made in general, right? We see Hyperledger, it's like a core tenant trading. So things that have to do with the core mechanisms always seem to succeed. But there's a glaring problem with mining. It's become very centralized around a subset of pools. It's third-party vendors, right? They're not on chain or anything, which is really odd. You think the miners would be decentralizing themselves, how they're pooling together, and they're not. So we're going to make a decentralized pool. A lot of these DAOs that go behind these hyper ledgers and things are they're not they don't really have a treasury function behind that. So we're going to be a mining pool supported by a decentralized treasury with a lot of on-chain logic and so forth. And we got a lot of cool stuff that we're just kind of building into that stack. And the final big problem we saw is mining led to the advancement of ASICs, right? Because of the race of who can get the better chip. So now because of this new development with ordinals, you see the blockchain's getting really bloated with a lot of data. So I see the same occurrence is going to happen with the hardware side on the node side with data storage and so forth. Is going to lead to an advancement of that hardware is going to really expand quickly. So we're going to incentivize node runners with our token. So they run a good full node and they're mining.
During that process, I learned that there's this new token, non-arbitrary token, that's being minted on the Bitcoin blockchain. Can you tell us more about NAT?
So Nat's going to be part of our treasury and it'll get distributed through our mining pool. So the Nat token is really interesting. This is a 2-year-old project. I didn't make this. Somebody figured out a way where they're taking the data that's inside of Bitcoin blocks and they can index it. And they took a piece of the data that's in every single block that has to do with the hash that's getting put into the block, and they're allocating these tokens now from the Coinbase level to Bitcoin miners. So they're producing it no matter what. Everybody can collect it. It's up to them. But now there's two awards to Bitcoin mining, Bitcoin and Nat token. And that one's indefinite supply, but every block has more or less hash. So if there's more hash, there's less Nat. If there's less hash, there's more Nat. And the whole goal of that is to be a subsidy so they can continue to grow because there's this weird ongoing thesis that nobody's really questioned is Bitcoin is just going to continue to double in price indefinitely. But if you think about that, or sometime after 2036 or something to that effect, Bitcoin would be valued beyond the value of the GDP of the globe, of like everything combined. So it's like that's not financially possible. So the subsidy going to the miners is not sustainable, right? Costs are going up and they're already pretty tight in themselves. So that's the whole goal of NAT, and that'll be part of our treasury.
I find that really interesting. I mean, NAT could be the non-arbitrary token that offsets the shortfall after the halving and the increase in difficulty rate.
Yeah, yeah, right. I mean, you have this weird dichotomy, like people thought the halving is good, which it is good, right? It's got this finite supply and it's an interesting dynamic around that that kind of funnels it down over time. But that the hash with the miners, right? I understand the whole concept is like some miners can be shut off, so the hash rate will go down and it becomes easier to mine. But they don't talk about like that's just like the math part of it, right? But what about business scale? If anybody is like a business inclined individual and they understand scale, particularly infrastructure side, when business scaling starts to take over and you got these smaller miners that can't participate in the network anymore getting turned off, they can't just jump back in when a larger company buys up all these auctioned ASICs and so forth, and then they scale up even bigger. And now the hash rate's back to where it was before. and the small guys can't jump back in. So it just becomes more centralized. So that's kind of the ongoing thesis around that, right? It's gonna end up getting more centralized because people can't scale and they need this other subsidy so they can continue to finance their business and expand. Good. And the costs keep going up. Electricity, yeah, there's cheap electricity everywhere, but you can't just unless you're some giant company, you can't just jump to some third world country and be like, "Yo, let us plug in here." You gotta build infrastructure around getting plugged in there, and maybe the government is gonna get blocked. The IMF has already blocked, I think it was Ethiopia or something like that, or maybe it was Kazakhstan. They wanted to do heavy Bitcoin mining, and the IMF was like, "We're not gonna give you any more money if you do that." So they stopped it.
Similar to what happened with El Salvador.
Well, El Salvador is also, yeah, you're right. They did have some blocks that occurred there. And I think that was more so around El Salvador purchasing Bitcoin with IMF funds. It's a threat to them, right? Because they want to go and they have their own internal currency. I can't remember what it's called, but they lend out like this global currency, not a dollar or anything, but there's this one that they essentially indebt countries to. And they're like a loan shark, and that's how they kind of take over countries. And Argentina's unfortunately just gotten chewed apart over like 50 years from them.
So that's interesting. I mean, they indebt countries and pretty much have a strong chokehold on governments with the external funding that they provide, um, and ultimately take control of all the natural resources as collateral. But until that happens, the people are pretty much paying back for this debt through the tax system. But there was a book about that called Confessions of an Economic Hitman. And it shows how, large consulting firms go into countries appointed covertly by governments to create so-called feasibility studies around economic development, and then getting loans against these plans to justify um, the credit being issued to these governments. And they end up taking over nations that way.
Yeah, I mean, IMF is wild. It's kind of like this rogue agency people just like, for some reason, never really talk about. It took a long time in the United States for people to warm up to the Federal Reserve in itself. And a lot of people still don't even understand the Federal Reserve.
Yeah, these external funding sources come at the expense of the people. And they're pretty much structured as modern day colonial rule, where you're promising nations and governments social and economic development plans. But little do they know is they're getting indebted to these
It's
nations.
it's no different than what China's doing down in Africa right now. China's gone up and down the Ivory Coast, and they're lending a lot of money to these African nations, and with the intent, really, at the end of the day, to take their seaports or something to that effect. So and U.S. actually has its own bank that lends out money in a similar fashion, but unfortunately, the U.S. Import Export Bank is really slow to approve things, so they can't keep up. They're losing that battle for sure. But I mean, at the end of the day, the mining, like the Bitcoin mining, is getting centralized. They're getting blocked everywhere, and there's about 1 million miners globally. I mean, I feel they need to be decentralized instead of going to these third-party vendors. So that's kind of our goal, is to make a decentralized pool and let them independently mine Bitcoin into a pool. And then also on the node side, running nodes, there's only around the whole world, publicly you can view about like 50,000 nodes, but some hide behind the Onion network, and there's probably around 100,000, 150,000 nodes, which really, it's a lot, but it needs to be, I think, at the same level as miners. And so we need every miner to run their own nodes and really just make the network more robust. And it needs incentivized, unfortunately.
That incentive would come with actual market value for the NAT token.
It already has it. So yeah, it's already has market value. It initially was just getting traded on some decentralized exchanges, mostly a Uniswap. They've had a handful of centralized exchanges start to pick it up now. So it's had, I think last I looked, the market cap's been between like 20 to $30 million, which isn't nothing, the big scheme of things significant right now. But I would say the significant part outside of talking about trading it the hash rate. As of today, there's around 55 to 60% of all the Bitcoin hash rate is starting to claim the NAT token, and that's between Ant Pool, the largest pool in the world, F2 pool, Spider Pool, and then today via BTC, there was on-chain activity where they started claiming the NAT token. So that's almost 60%. A lot of that's pretty much out of Asia. That's pretty significant. And then to kind of compound that, Spider Pool, they publicly announced that they're going to integrate into their dashboard the distribution of the NAT token to anybody that's mining Bitcoin. So they'll see it in their dashboard and then they'll start receiving it into their wallets too. We know publicly from the team that created NAT token, the TAP protocol, the team behind that, they've worked with Spider Pool and helping them integrate it. So right, like they're gonna move it around and see how to integrate it into their tech stack to properly get it deployed to all the participants.
So why is NAT token interesting for crypto traders?
So what's interesting here is like if we're talking about, I guess from a speculator side, right, that likes to trade and kind of gauge like where is this going to go from here? If you think about like in the business world, it's all about distribution, right? So through the years, like we've had staking, that was a new distribution model. Then you started seeing airdrops was a new one. Then there was block drops and right ICOs and all this kind of stuff. So what's interesting here is every time a new pool takes on the NAT token and they officially start distributing it to the miners, Spider Pool, for example, when they start distributing it, that's going to be about 20,000 new holders will automatically uptick the holder count overnight. From my research, the average amount of unique wallet holders for the average blockchain project is between like 1,500 to 5,000. And then if you get into the larger protocols, it can be between like hundreds of thousands to a million. So when you start adding, 20,000 at a time, 100,000 at a time, the adoption rate's going to uptick really quick. There's going to be a lot of people trading it right away or they're holding it and a lot of new people talking about it. So it's going to be a quick upswing once this all starts get going.
So walk us through the process or high level, what a Bitcoin miner would need to do or give up in order to get NATs minted to their wallets as they mine Bitcoin.
So with this right now, they don't have to sacrifice anything. It doesn't cost any more hash, electricity, or anything. They just continue to mine Bitcoin, and now they got this new subsidy. So it's really interesting. There's nothing else I could find in the market that's doing that. And somebody else could create a new NAT token, but you're gonna have to catch up on the organic growth that occurred.
And how are NATs minted? Uh, what, what's the technical process behind getting those data sets?
So there's an L1 protocol called TAP protocol. It was created by a German guy named Benny the Dev. If you find him on X, it's Rarity Garden, but he goes, his name's Benny the Dev. And so this TAP protocol, it's an L1, right? It kind of directly connects to Bitcoin. And what it'll do is it'll you could say tap, I guess, it'll tap the block. It'll find that data set in the block. And this specific one, forgive me, I don't remember. It has a name. You can find it. I'm pretty sure it's in the net white paper on the website, but it'll find that data set that appears in every block. And that once that's there, it shoots out the token.
That's what we call digital matter theory.
Yeah, exactly. Digital matter theory. And what's interesting with that is like some people, I'm not a big fan of NFTs and all that stuff, but I mean, if you are, there are some digital matter theory collections that have been made. And what's interesting with those is they'll have a subset of block data that they look for, and each subset of data will have an attribute attached to that. And so when they occur, it'll create that NFT that you can mint. You just pay a fee to mint it. It'll be created. And some of these, the data sets don't appear in every block. Some appear every other block. Some don't appear for, months on end. And some, it could be like a one-time thing, and who knows when that data set will come back. So from that, I guess, perspective, if you're into NFTs, like that's definitely a component of it that can occur that's really, really interesting. And so they have different collections. There's one, the first one was called Nat Cats. I guess everybody likes animals. And that's how we're using the TAP protocol to distribute our tokens to the node runners. So we'll be doing kind of the same thing as NAT, but sending our token to the node runner. So NAT will kind of secure the the Bitcoin mining side, and then we want to secure the node side and tapping into the block data there too.
That's amazing. And what about your new venture? You want to give us a little bit of a deep dive on that and how you plan to accelerate institutional adoption of Bitcoin and Bitcoin mining?
So our venture is going to be called the One Bitcoin, One Bitcoin dot Foundation, and it'll be an institutional facing stack for decentralized mining and an on-chain treasury that'll be supported on the treasury side. Will have we're calling DeFi adapters, where there'll be some AI components in there, on-chain logic that'll rebalance the DeFi positions in there. Obviously, decentralized mining pool, so we won't necessarily, in the traditional sense, collect a fee. It'll go into the treasury. To grow the treasury, we're going to issue out decentralized variable convertible notes. So similar to how MicroStrategy grows, right? They issue out this convertible notes that people will buy. And then obviously MicroStrategy purchases Bitcoin with that. So we're going to, the same strategy, but it'll be on chain. And then they'll, around those notes, they have downside protection, right? On redemption rights and things to that effect. We're going to do the same strategies, but all that logic will be built on chain. So, but it'll be transparent. Everybody can see that logic and know that there's downside protection. There's, it's not like these strategy tokens out there where they're like, we'll buy this NFT and then we resell it for like 1.25 more and just keep doing it. Or like that's not a perpetual strategy at all. So we're just emulating the same strategies on the treasury front and putting that on chain. And then back to the Bitcoin mining side through the pool. A big problem with that is like, if you're a big Bitcoin miner, to withdraw your funds and collect your award isn't too big of a deal. You eat some of the fee, the withdrawal and all that. But for smaller miners, there's a big growing niche around the world with lottery miners who maybe put it on your desk and you potentially could win a whole block, right? So that's a huge growing niche. Or if you're just a smaller firm, your margins are thin around the fees, the pool fee itself, and then the withdrawal fees. So there's a new protocol that some anonymous developers have built called Cashew. And Cashew, what's interesting with this is you can create basically a derivative of Bitcoin itself that can go through the Lightning Network. It's almost like it's P2P and it's redemptive one-to-one Bitcoin. So you don't have to withdraw. Let's say you mine a Bitcoin, you don't have to withdraw and claim it right away. We'll distribute it as eCash to them. So they have that representation. They can go and trade it, spend it, or whatever they want. Or they can just redeem it one-to-one whenever that is. Like, let's say they accumulate more over time and then they go, oh, now I got enough where I'll eat the fee and I can redeem it through the eCash. So we'll distribute our awards through eCash versus just giving them the Bitcoin right away. And then also we want to find different ways to incentivize miners. Sometimes as a miner, just like a large electric utility company, they offload future profits or right through electricity, and you have like future markets around that and all this kind of stuff. We see the same thing going to develop with miners.
That's amazing. A whole new process to securing the Bitcoin blockchain, eliminating the barriers to entry, allowing miners and non-miners to build Bitcoin treasury and hedge against the global fiat system. That's amazing. Satoshi Chad, thank you for joining Drilling into Crypto. Look forward to seeing One Bitcoin launched on the markets very soon. Stay tuned, everyone. Thanks for drilling into crypto with us. If you enjoyed our discussion, please give us a like on your podcast app or social media, and don't forget to subscribe. Join us next time when we will deliver more perspectives on crypto asset mining, energy markets, and the global financial revolution.